Hi everyone, so my name is Adam. I am based in the city of London. I'm a fund trader, I'm a technical analytical trader, and I think this is hopefully going to be the first of a series of maybe quarterly analysis that I do on ARK investments. And so what I want to do is kind of very quickly introduce the idea of how technical analysis is very reliable at predicting at least the shorter term intentions of price action, because most people who claim to be fund or technical analysts seriously high end, the very next thing they say is, well, price action can't really predict the future, or technical analysis doesn't predict the future, which is bollocks. It usually gives a very clear indication of where the market is looking to go. And if you're not sure about that, you can see on my channel, you'll see my weekly analysis, and you can see how successful the weekly read of the markets is. So what I want to do in this particular I want to keep it relatively brief, but I want to first of all give an introduction to what the markets, what the price action, pure price action, is saying about ARK innovation. So to kind of, before we get started, is first of all, I'm a massive fan of Cathie Wood. I'm a big fan of ARKs and ARK's ETFs. I'm going to run through them. I'm going to give you some technical feedback on what the price action itself is saying. And that's principally it. This is not meant to be derogatory. It's really just meant to be cold, hard. This is what the price action is saying. This is what the situation is. Now, one of the things, and you'll have to forgive me, I'm going to have to go away and research it because smarter people than me know the correct term, but there is a term, I believe, for when we have a very well-reasoned, sort of laid out argument for why things should be why they are, and at the same time, things just aren't behaving accordingly. And so I know there's a word for it. It's a type of fallacy where, it's potentially maybe just based off maybe it's a logical fallacy or something, or where somewhere along the line it's based on a false premise, or we're missing information that should be explaining what's going on. So I usually watch Cathie's her videos, go through it. It's always a lot of evidence behind it. It always sounds well reasoned, and yet at the same time, I've seen actually other people give better reviews, ironically, of why her performance, of why the ETFs have been performing the way they have. And it essentially comes down to the constituents within the ETFs. That's basically it. They're just different weightings, different market caps, and they've had their, kind of time in the sun. So what I'm going to do now is really give a recap of what is the state of ARK right now, and what is the most likely behavior or outcome of it over the next quarter. Okay, so let's say until March 2022, where do I think it's going to go? What does the market say? And then just kind of update that as we go. So first of all, I've got a couple of them up. I've got the innovation ETF, the next gen one, the genomic revolution, which conceptually I think is an absolutely brilliant idea. I think they've got I love their idea of disruptive investment, a forward-looking investment, I think, and alternative investments. I think they're similar to Elon Musk in that respect of just kind of like, why don't we, this is the kind of world we want to be living in. This is sort of where we should be putting our money, and this is what we should be looking for. So, and I love that idea. So conceptually, I think there's some good ideas, but let's go ahead and actually have a look at this. So what I've got in front here is a weekly chart and a monthly chart. And the reason I'm using a weekly and a monthly is because that'll give a much clearer picture, at least, of what the sentiment is at the moment. So first of all, what is abundantly clear is that the weekly and monthly are in strong downtrends, which means that they're selling off. Right now, this is not a buying opportunity. This is usually the mistake that most people make, is that the market is selling off, and they look, in principle, and again, I'm also big on value investing the way that Warren Buffett works, which is looking for something at a really good price. But inherently, it will have characteristics that mean that whatever the price is reflected on the charts is usually not necessarily reflective of the inherent value of the company. And so and also I think at the same time, is I don't think he would be buying something that had been underperforming for years if he didn't already have an idea of what I could quickly fix to just change all of that. The problem is that the way that the ETFs are structured right now, there's very little that can be done to change their momentum. You can't exchange the constituents. The individual businesses can't change what their core plans are. So I don't really think that's going to change much. So basically, they're going through a major sell-off. And really what you don't do, and if anyone tells you to do this, I think it's just a bad idea. This isn't financial advice. This is just kind of my experience in the markets, and at least how I would, I guess, take, how I would approach this for myself personally. When a market has been underperforming, when a company has been underperforming, and not ARK specifically here, but when other companies have been underperforming for 2 to 5 years, and their share price has just been consistently dropping, that's not a deal. That's not a sweet deal. I'm not like somebody comes to you and goes, yeah, it's right down here, and gives you a list of reasons as to why this is a really good, they've got these projects in the pipeline, this is going to turn around. If they've been underperforming for 5 years, that is kind of where they're going. Whereas if we are having a general market sell-off, which we are currently, right? If you look at all the constituents of the S&P and the Nasdaq, you're finding it's really only a small percentage of them that are doing well. A lot of the rest are selling off heavily. So right now, there are a lot of companies that are kind of shedding weight. We've also had a really big booming market. And so a lot of this, yes, that is a contributing factor. And so when I talk about getting involved in a company that's had a 5-year record of kind of heading down, if you look at something like BP, so BP's heyday was from like 1990 all the way to 2000. Since 2000, 2001, as far as I'm concerned, it's been a dead horse. It's just consistently been losing value for the last 21, almost 22 years. And yet it's a big brand, so people kind of buy into it. But if you look at the general flow, it's just effectively hitting lower and lower and lower over time. So BP is just, as I said, it's a dead horse. So I wouldn't be buying into it now just because the share price is cheap. It doesn't really make sense to me to do that. Now, having a look at ARK Innovation, in principle, conceptually, and certainly listening to what Cathie says and all the information I can get on hand, I do think that there's some real value there. But this is really about talking about what's going on with the price. So there's a heavy sell-off. Let's go through and have a look at the next gen one. Next gen one is also kind of heavily selling off. Genomic Revolution selling off the most. Okay, so we've got FinTech as well, which is kind of not doing too badly. It's also sold off 50% of that, and ARK Autonomous. So there are different kind of technical analysts out there. You've got Elliott Wave Theory, you've got Gartley patterns, you've got Fibonacci, you've got all those various kinds of things. Now, the thing is that a market can only exist in one of 3 states. All right, it's either going up, it's going down, or it's not going anywhere. It's consolidating. Now, Tesla, for example, was going nowhere for years. And what is amazing about that, mind-blowing actually, is that it's really only been doing well for the last 2 years. And yet we all kind of think, it must be the last 5 years, but it's just been 2 years. It's just been 2019, 2020, and that's where we are today. So having a look at this, it's actually the autonomous tech, which makes sense because we can see with COVID and lockdowns and quarantine, we can see a lot, and just general technology, autonomous is taking over. So a lot of that actually makes sense. You can see that it's kind of it's been hit the least out of that. Now, it is also, I believe, acceptable for a company or for a stock or for a market to have a 50% correction, kind of 2 steps forward, 1 step back. You can have that. That's relatively good. You can even go as far as a 60%. Let's call it a 618 Fibonacci correction. And that doesn't necessarily mean that the company itself is inherently flawed. It could just be that a rising tide lifts all boats. The company's done really well. It's new and shiny. It's got some, it's very transparent. I love the way that Cathie communicates with everyone when they're going through situations. She's conscious. She cares about it. She's personally invested in it. That's great. And so all of that is, the main thing is the communication there. So all of that doesn't necessarily mean that there's necessarily a structural problem. So I'm not here to talk about that. I'm saying, listen, I'm going to explain when I'm going to be looking for changes to happen, which to me would then represent a change in the direction of where it is going. But currently it is heading down. So key thing here is to talk about the monthly. So for example, the monthly here, the price action here is currently really near the low of it. And when the markets close near the edges, near the lows or near the highs, that is usually heavy buying pressure if they're closed in the highs, or it's heavy selling pressure if they're closed in the lows. This is broken through a level of support that was holding it. So now it's in free fall because it was being held. It's now fallen through. The next gen as well, there's a couple of these. So I'm going to bring up a couple of features that are just sitting on each of these. So first of all, what I've done is just overlaid from its lows historically, at least to the highs, so you can kind of get a sense of how far back this has gone, how far it's, let's say, fallen from the highs. And so it's really up at these highs here around. It doesn't really matter what the price is, but it's come back.
to the 618 from the highs. And this is an area, which is why I put the green box here. This is an area in which it can even in a healthy stock, can fall that far back and then recover, and that's normal. It's acceptable. Currencies do it all the time. It's not a problem. Commodities do it all the time as well. Gold can pull back to the 618. Not really a problem. So there'll be some purists who might say, listen, I can go to the 786. It can go a little bit further. 618 for me is kind of the edge of where I would say it is. And so this is an area where I'm expecting that it could potentially turn around. And also I can see here, we've got a strong, healthy downtrend. Okay, so the reason why this isn't going to change direction necessarily anytime soon is because the actual structure of the downtrend is not panicky. Okay, look at the price action itself. Look at the candlesticks here. If we go, oops, not that. Wrong hotkey. So if we look at the candlesticks, let me just hide everything else. The body language of all the candlesticks here is very similar on the way down as it was on the way up. That's important because volatility represents itself or shows itself in the candlesticks as larger, kind of more spiky. This is more erratic behavior, whereas kind of intentional behavior looks very similar on the way up as it does on the way down. This is intentional selling. It's not panic selling. It's intentional selling. Okay, even here on the monthly, you can kind of see it heading all the way up and all the way down. So it is actively selling as opposed to being sort of accidentally selling off as a result of fear. There is intentional selling here. That's important. That's significant. For whatever reason that is happening, the selling is intentional and controlled. It's very important to understand it. Let's look at the next gen stuff here. Broken through these floors. Same thing again. It's heavily bearish. This is not panic selling. Okay. I also know, and this is a bit tragic, of course, is that the AUM, the assets under management, has shrunk. That's what's going to happen. So potentially what is just one of the biggest, easiest explanations here is that people are simply withdrawing their funds, and that's adding to the movement to the downside, which would be intentional. That would be intentional. So that would explain why it's heading lower. People are probably losing faith. They're not thinking long term. They're impatient. And so they're probably extricating themselves. And, you know, that's a little bit unfair. But you know what? They'll be back in when it starts heading a little bit higher. So the key thing here is looking at this level. Bring in these levels again. You can see a nice level there at 75. Broke through that. And that's recent. Broke through last week before last, 2 weeks ago, and it's just starting to head a little bit lower. But it's got quite a way that it can go before it even hits 50%. So when I look at the ones that have already sold heavily off, they're now in an area where they could potentially turn around. I'm just telling you that because the price action is not fear-based selling, it's very much intentional selling, and therefore it could very likely continue. But this is a good area where I think it could potentially stabilize. If it continues to fall below that, then it's effectively going to go back to its original pricing on some of these, which is going to be a pity because I do think there's some real potential there. Okay, it's coming into these old highs here if it's going to do that. Currently it's sitting at around the 61.8. Okay, so the one thing I'm going to do now, I'm just going to move this to a different layout because there's a couple of other things that I do want to show you. Okay, so I've changed the layout to a single chart layout, and I've introduced a couple of other features into this. A couple of other things quickly. So let's just go through these. I want to do it for about another 5 minutes and then we'll kind of pick back up. So one of the challenges it's going to face is essentially a stock or an ETF, anything that the public can effectively actively involved in, is price-based. So even this is something that even fundamental analysts as well as technical analysts agree. This is where they cross paths, which is price. So fundamental analysts will say, I think its value is up to here, or I think it's overbought at this price, I think it's underbought at this price. And this is, so the price levels ultimately display themselves on the chart. So for example, here we can see visibly, we can see where price was struggling to get beyond a certain level. We can see here, potential 135, it's found support, broke through that, came back, found resistance, couldn't get back over the line. And so this is one of the challenges that quite a few of these ETFs are going to struggle with, is that when they get back, are they able to get back over that kind of line? But here's where the real magic is. What I'm going to do is change the time frame. I'm going to go up to a quarterly chart. So here, what we're looking at actually is to see its performance on a quarterly basis or yearly basis. And why I'm doing this is I want to show you where it's likely to stabilize. First of all, we're on an uptrend. Okay, so let's start off with the ARK Innovation ETF. We are in an uptrend. You might not think so because price is selling off at the moment, but we are producing a series of high lows, high highs. There was a massive breakout, which you can see there was a failed breakout in January 2020, and then in April, which is Q2 2020,
there was a breakout and it took off and it did really, really well. Okay, bit of exhaustion here, which is normal. So once it's had a big run, same with Tesla, same with Bitcoin, all of you getting involved in those, you kind of relate to that. Then it just couldn't get any higher. So it started to come back off. It's letting off. This is kind of that normal, the kind of the wave going onto the beach and then coming back out. It's normal. Coming back down, you'll actually see that it tends to react with this moving average here, which in this case is going to be the 20 moving average. Doesn't matter. It's a simple moving average, nothing special about it. But it's a really good indication of where true value often lies. So as a market is kind of moving and doing whatever it's doing, there generally is a value that's working its way through the center of it. And this is really where its true value lies, is closer to about 72. So this is a good area where, to me, it would make sense to see if we turn around. So the way in which I would do this, I'll be looking at, the next video that I produce on this will potentially be Q2. I want to see then if there's a formation of what I'm looking for as a bullish candle. That will then be an indication to me it is stabilized and that the buyers are coming back into the market. If it settles with a strong bullish candle, then I'll be looking for Q3 to break higher and then start to return back up to the old highs. Okay, so if that's going to be the case, if that is what's going to be the case, if the market is going to recover and go back up, that's how it's going to show itself. So I'm reverse engineering that. Same thing again, next generation one coming back down here. So according to this could stabilize anywhere down a little bit lower around that 87 mark. And then you'll see I put a green box in those areas. Now, genomic revolution as well is already here. Okay, so it's uptrend. It's still an uptrend. Okay, it's still an uptrend. It's in this area. So that's why I want to see if this stabilizes where it is. A couple of these, I've kind of highlighted it with a box, but that's kind of the area where if it is in the future, that's going to turn around. This is the area where it's primed to kind of do that. Now, the fintech one is newer. It hasn't got enough history to really demonstrate that, but it will fall in line with the rest. Because if 3 or 4 out of those ETFs are being supported and becoming more and more bullish, then the money will just, it's a rising tides lift all boats. It'll stabilize as well. I'm not too worried about that. Look at the autonomous one. This has got potential to go a little bit further. Potentially, I say that. All right, so this could go into this area, could go a little bit further down, so we'll see. And I do think that most of them will do roughly the same thing. So in other words, they'll all keep going and then they'll all slow down, they'll all stabilize and then potentially start to recover. So that's really it. I thought that was very interesting to show that this is not particularly weak. This is just the behavior here is more exhaustion. Okay, there's just no more money above here, there are no more buyers above here. In fact, it's, in my experience, that is symptomatic of a market-wide, I was going to say that's my book for falling over, that is symptomatic of a market-wide kind of saturation. There's just no more buyers in the market. There's just enough money in the market, and so the market starts to take a bit of a breather. That's not massive failure. There's a particular look that the market has when it's exhausted. Again, this is a similar thing. That's just a normal natural sell-off. Genomic revolution. Again, that's just a bit of, let's call it depletion. Just exhaustion settling in. It's really tired. Lots of people trying to push it high and then it just takes a breather. Same thing happens on Tesla. Same thing happens on Bitcoin. So it's just, you can't avoid it. Where it gets interesting to me, and this is where the real danger is, let's have a look at it from a yearly perspective. So each candle is now a year's worth of data. And this is where the concerns are. This is a particularly bearish kind of signal. The signal here is that market is going to head much lower, at least down towards 50 or 57, around 60 mark. Next generation, not so bad, probably going to head a little bit lower. That's a particularly strong bearish signal. When you see that it, like Tesla's got it's currently on a couple of its charts, it signals that there's going to be a bit of a correction. It's still an uptrend, but it does mean that before we resume that uptrend, there's going to be heavy sell-off. Now, genomic revolution as well, done a big move. That's most of the sell-off there. It is very bearish, but most of the sell-off has already happened. So there's a point where you can see that the market has done that. Again, finishing off here with fintech, autonomous, we'll have a look at that. But that actually means, what that says is for the entirety of 2021, it ultimately finished as a sell-off signal, which doesn't bode well for 2022. That's really the story here. This one's actually not looking so bad at all. Autonomous one is actually just a bit of a depletion, but not a heavy signal. So heavy signal is really when the sellers finish completely on the other side and they've signaled their intent, they're closed in the lows. That's usually an indication that that's mid-momentum, that the next candle is going to continue it on. Anyway, so all of this really, just to recap, because I'm just kind of aware of the time, it's 19 minutes into the video, to go back to the monthly. All of these do have the potential to go
lower. They do have that potential. But I'm also saying that they have reached an area where they can stabilize. And so what would that look like? Okay, so we've also got volume here. You can see that volume might show potentially what I'd like to see, which is a good sign. Green shoots, so to speak, would be to see a strong green quarterly candle, monthly candle, or a series of those, and an increase in volume, a spike in volume as well. So that would show activity, and it would usually be buying intention, usually. And then you have to see a follow through. So you've kind of got multiple stages where the market will give a signal as to what its intention is, but then fail to follow through. So the market shows what its intention is, but just isn't able to follow through on that. And that doesn't happen very often. More often than not, it will give a signal as to what its intention is and then follow through. So what I'm looking for is that next signal would be to look and see a bit of an indecision candle, something with a relatively nice small body that would show that bearish momentum is slowing down. Then ideally seeing a strong, nice, solid, thick green candle, which would be the buyers returning, and an increase in volume, and that would show really strong, not only now, but the sentiment has actually shifted to the upside. And if that happens on the quarterly, that's a phenomenally good sign. For me, at least, I really like to look at that. And so that's what I'm going to be doing now. I'm going to be watching these to see if there's potentially a change in trend. I'm looking for a nice strong monthly candle. So that's why I'm just not really convinced there's any worthwhile doing a video on this until maybe March or April to see if there's any real shift in it. But I'm doing a weekly analysis on it anyway. So if there is going to be a shift and it's going to start to show itself in the weekly charts, in other words, the weekly chart, which is currently in a strong downtrend, starts to shift into an uptrend, that will consequently lead into a bullish candle on a quarterly basis. So in other words, you could start to see the shift happening just on the weekly chart. And so that's one of the things that I'll be doing in my weekly analysis videos. Amongst all the other companies that I'm looking at, I'll be looking to see if we start to see that shift around. So I don't even have to check the quarterly. If the weekly starts to head to the upside, then the quarterly is going to produce a nice indecision or bullish candle anyway. So I hope you found this instructive and useful. This is what I'm looking for. There's no rush to me. It really depends on how much money I have lying around, because if I've got cash just lying around and I believe in this, then, and it's a patient thing, I've got that 2 to 5 year plan, then for me, this is a fire sale opportunity. This is not really about selling per se. This is actually more about, well, I can buy it heavily at a discount. Fantastic, because it's come back quite a way. And if it ever does turn around, it's going to return to its old highs. I'm then going to be able to, get in near the ground floor because I missed it the first time around. So that for me is why this then becomes, personally for me, for my cash, a buying opportunity. But this is, as I said, this is not financial advice for you guys. You have to make those decisions for yourself. You have to know why you're making the decision. And you really want to be informed about it, and you don't want to financially expose yourselves. But think of this as an exercise. This is a great way to see something that looks like it's, in real trouble, that might potentially just recover, and in a year's time from now might be back up at its old highs. But yes, and again, it's trying to change how it's perceived. What is the perception of it? Yes, it is selling off now. I don't believe it's going to change immediately, but I do think it is now reaching an area where it could slow down in the next few weeks, and I'll be monitoring that, and then we'll see, and I'll know what it looks like when it's starting to shift back into a bullish mode. I'll start to see when the buyers are returning. You can see it because it starts to show itself. Anyway, I'm going to leave you to that. Something to think about. If you have any questions, please just put them in the questions box. Anything. I'm happy to engage in any way. So I'd love to hear your thoughts on this. And that's it. And then we'll talk about this again, I guess, in Q2, unless it requires a video before then. So thank you very much.